Hello, everyone, and welcome to another episode of the Daily Gwei Drive Thru. I'm your host, Anthony Sassano. I'm here today with Eric Conner to talk about all things crypto. Hey, Eric, how you going?
Good, good. Yeah, if we're getting in a groove here, right? I think we had to take a little bit of a break for some travel we were both doing, but we're not rugging. I think this is our
Yeah,
fourth now. Last one, I guess, was with David, but we seem to be in a good groove here.
yeah, we are. We're doing good, which is great. I think David's too busy fighting people on Twitter to join us today, but no, no, he's all good. He's all good.
Or
I think
Burning Man, maybe.
Yeah, he did go to Burning Man. Yeah. So I think that since the last time we spoke, there's been a lot of movements. I guess like with the ETF stuff, which was kind of the first thing I wanted to talk about and wanted to cover. And for people who haven't followed along with, I guess, the latest in that world, I mean, I think we obviously had that big win. Grayscale won their lawsuit against the SEC for the SEC to basically take another look at Grayscale's conversion of their existing trust, the GBTC trust, to a proper spot BTC ETF. We've obviously had after that the ETFs that are existing, the existing ETF applications be delayed, which was to be expected, of course. No one expected those things to be approved. And for those of you who don't know, the final approval dates for those things are in March for most of them. There is one that has an approval date in January, but it's March for the vast majority of them. The next approval deadline is October, so we might see a delay there as well. We'll have to see how that shakes out. But also in, I guess, like non-BTC ETF news, we also had Van Eck and ARK recently file their ETH spot ETF applications, which, I mean, to me, it wasn't surprising. We've always said that BTC and ETH are both going to get ETFs. It's just a matter of time. I personally think the odds of the BTC ETF getting approved are approaching 100% for next year. This year, it's kind of a coin toss. Like it could happen this year, but it feels like it's more likely to happen next year. And a fun thing about that is that if it happens in like March of next year, where they all get approved, that's like 1 month before the Bitcoin halvening, which is just a pretty amazing coincidence considering that a lot of people think that the halvening leads to the start of a new bull market. And traditionally that has been kind of the case, right, with this 4 year cycle. But I think I wanted to hit on both of those topics, but generally with the ETF stuff, what do you think? Like, what kind of odds did you put on ETFs this year versus next year? And yeah, I mean, do you agree that they're kind of inevitable?
Yeah, I mean, I think I'm basically at the 95% that they're going to happen this year. I mean, there's a lot of like tailwinds with some legal wins, right? And I'm not an expert in this stuff, but we had the XRP win against the SEC a few months back. We recently had like the Grayscale win against them a few weeks ago, where basically they can, and I don't know all this like legal language, but they can basically like convert or they won the lawsuit saying they wanted to convert their trust to an ETF or something like that. But it almost doesn't matter to me, right? Like the fact that we're winning, I'm saying we, like crypto community, is winning lawsuits against the US government is just bullish in general. And I think at this point it's just gotten so crypto, like when we were first talking about ETFs, like on our podcast 4 years ago, right? We didn't have much support in Congress and the US government. Like crypto was still very nascent and young. And now it's become a partisan issue, right? So you're seeing like not every Republican, not every Democrat is on one way or the other, but in general, you're kind of seeing the Democrats right now be a bit anti-crypto and heavy on the regulation side. You're seeing the Republicans in the US kind of pushing more pro-crypto stance. It has become an issue. I mean, the president of the United States has stood up there in press conferences and speeches and called out like crypto, like whatever, tax evaders or something. And they were just talking about like wash trading, right? But it has become a political issue. And anytime that happens, it's good for us because like now you're going to have one side fighting for you. And this is just how US politics works, right? We have two parties. One side says, oh, we like this. The other side says, oh, okay, since you like it, we hate it, which is just mind-blowingly stupid. And I hate it. But that just is how US politics work. And, since we kind of have this talking point now of crypto and other countries kind of pushing it forward and saying, okay, you can do ETFs, like Canada, for example, has crypto ETFs. I think it's just becoming almost ridiculous, I think is the right word, for the US to be like so behind now and just adopting this, right? And like I kind of hate using like the comparison and the meme of like, oh, what if the US heavily regulated the internet back in the day? But I do think it's pretty relevant, right? Like the US economy today is in a huge boom and has been for the last decades because we were very open to the internet and adoption of anything that was built on the internet and all the companies that came along. And we're still seeing that today, right? Everyone talks about FANG stocks and all of these tech companies. Like at a point, I think the US will realize, hey, we can't let this is real. We can't let these other countries like take our talent and our money from us, and they'll have to wake up, right? So like the partisan issue of crypto is kind of that first stage of that. And I think we're there. Gensler's lost too many battles now in court. And like at this point, come on, like the old excuse was like, oh, the market can be easily manipulated. Like that was the old ETF rejection, right? Like 3-4 years ago. That's just not the case anymore. Like you can't, there's no one can go manipulate the Bitcoin market by themselves, right? That's impossible. Liquidity's too high, trading's too high, it's everywhere. So I just don't know what their excuse would be now, right? That was the old excuse I don't think would hold up anymore. And now if they reject them, you're going to have like 50% of Congress saying, okay, what the hell is going on? Which that wasn't the case back in the day. So, I mean, long story short, to sum it up, I think the tailwinds are too strong. I think they're going through, and I think the market has severely underpriced the impact of them.
Yeah. I mean, I totally agree with the market impact, which I think we'll get to. But the other kind of important point here, I think, over what you were saying about how the SEC has traditionally denied these things due to market manipulation concerns. The important point, I think, for people to realize here is a lot of the trading volumes of crypto is actually coming back to the US now and back to the more regulated and legitimate markets rather than on offshore exchanges. Obviously, we had the collapse of FTX, right? Where, I mean, their trading volume obviously went to zero. And then Binance is actually facing a lot of headwinds in the world, not just within the US, but also in Europe. They've had a lot of their licenses revoked or not approved, and a lot of their market share is going down. So I think that should definitely appease the SEC for them to say, okay, well, a lot of this trading is actually happening on heavily regulated US-based platforms. A lot of the volumes are there. A lot of the liquidity is there. So if they were to deny it based on market manipulation concerns again, they would then have to defend that position if challenged in court, right? And basically say, well, we think that the market is not big enough and it's being manipulated on US regulated exchanges, which just opens another whole can of worms here. So I think that if you take that perspective and look at it from that kind of point of view, you start to realize that the SEC really doesn't have any legs left to stand on to deny these things. Specifically when it comes to the BTC ETF, obviously with the ETH one, it's a bit more murky because Gary Gensler has gone on record and said that he thinks everything except BTC is a security. But I honestly think that he's going to lose that fight and continue to lose that fight as he has been in court. Obviously, the XRP win was a big signal there, but ETH generally, I mean, I feel like it's basically impossible for them to prove in any which way that ETH is a security. Even if they wanted to prove that the crowd sale was a investment contract, it would be extremely difficult because, I mean, the crowd sale was not done in the US, right? It was done extra US. It was a long time ago now, and I don't think they'd be able to find any people that bought the ETH ICO that felt hard done by or wronged by the ETH ICO. So it would be difficult in my mind to kind of go after that. But on the market impact front, I mean, I think a lot of people are confused by this. I actually have watched a few of these kind of traders lately on YouTube just to get the vibe check from them. And they obviously look at all the different levels on the chart and the technical analysis that they do and everything. And all of them are like, wow, okay, we had this grayscale win. The price went up a lot, but then it went, not a lot, but like the price spiked, right? But then it sold down and actually ended up lower than before the win. And they're all confused. They're all like, this should have pushed us higher. I'm like, but the thing is that the reason it didn't is because the liquidity right now in the ecosystem is very low. There's no new money coming in. It is the same traders playing against each other. It is what people like to call a PvP or player versus player environment where everyone knows the game, right? Everyone knows there's no new money coming in. So everyone's too sophisticated and just playing against each other for scraps, basically. So if you want to play against each other in a player versus environment game and you want to play that out, you need new money coming in. And I think that the new money is not going to come in until next year, at least in my mind. And I think that plays into the 4-year cycle that everyone talks about. And this is the next topic that I wanted to cover leading on from the ETF stuff, where there has been this 4-year cycle based on the Bitcoin halvening for as long as Bitcoin has existed. And if you go look at the charts, it actually plays out quite perfectly. The 2012 start of a bull market into 2013, and the 2012 was the halvening year, 2016 halvening year into the 2017 bull market, 2020 halvening into the 2021 bull market, and now we're having 2024 halvening into a potential 2025 bull market, right? But the bull market tends to start in the halvening year and then just go crazy in the following year. But that's what you need for the new money to come in, for those kind of cycles to play out, and for it to become a self-fulfilling prophecy. Because even the people who don't believe in the 4-year cycle will still probably buy as a hedge, to be like, maybe I'm wrong, right? So I'm going to buy anyway. And then what ends up happening is that you break these kind of ranges that the price has been stuck in for quite a while. So there's these kind of crab market ranges. For ETH, it's like 1 to 2K. For BTC, it's like 20 to 30K. And if you sustainably break above that, it becomes a kind of snowball effect from there. And then all the narratives obviously come into play and we get the bull market again. So I think that right now, that's what kind of everyone's waiting for and waiting to play out. It's like that halvening 4-year cycle. But I'm curious, Eric, if you are like a pro 4-year cycle guy, or do you think that it's not going to play out like that this time because of maybe macroeconomic factors, which is something that people bring up? I'm just curious for your thoughts there. And just to be clear, I actually believe in the 4-year cycle still. I think it's going to play out exactly the same way.
Yeah, I mean, I think it's become so I think I don't like when people like take charts and they're like, oh, this happened in the past, so this is gonna exactly happen like that. I think if you step back and take like the larger 4-year cycle view, I actually do think it will play out this time. I don't know if it'll happen next time, just because like everything has to perfectly align, kind of like you were saying, right? Like macro environment has to kind of line up. You have to have like a lull at year 2 or 3 that like goes like macro's pumping in year 4. Like you're not gonna, for example, let's say like next time, like not this cycle, next 4-year cycle, like right as we're going to like this point, like, or this could happen this time, I guess, but there's like a huge like Ebola outbreak or something, like, or like World War III starts, right? Like the 4-year cycle isn't that strong. But I think right now in year, whatever we are, 3.5 of this cycle, everything is aligning perfectly enough to where it's going to become a self-fulfilling prophecy. And a lot of like TA on graphs or like memes like this are just self-fulfilling. Like you're saying, like people are like, they just start believing it, and then everyone in crypto Twitter is talking about it, and then like your neighbor starts talking about the 4-year cycle, and then everyone starts buying. You're like, oh, the 4-year cycle worked. But really it's because, I mean, it's a meme at the end of the day, right? But like memes run this entire market. But it does make sense. And like the halvening is kind of, as much as I hate the halvening and so like zero IQ, but like zero IQ works. Like I'd rather be left or right curve, nowhere in the middle, right? And like the middle would say, oh, the halvening like doesn't really have any impact, blah, blah, blah. And like this is, I'll tweet this all the time. Like, you know, no one's actually thinking about security policy, but that's not what mainstream's thinking of, right? They're thinking, oh, there's less Bitcoin being made, and like my Bitcoin is going to be more valuable at this point in time. So I'd rather left curve that for sure, which I think the entire Bitcoin community is left curving everything these days. But you know, I think it will be a catalyst. I'm not too worried about macro. I mean, yeah, there's some weird stuff going on in the markets around like rates and debt, and you know, is inflation really going to go away? And you know, I think the average American is working a lot more hours and making a lot less money. There's a lot of like weird things, but at the end of the day, and I say this all the time to like friends offline, like the stock market will lead, and that'll lead crypto. And where do people have to put their money? Like it's either in housing or the stock market. Like where else are you going to put it, right? So, I mean, these days maybe savings, but I feel like everyone's just kind of over like earning a small interest rate. Like we're in this new stage of markets where people want to like chase things, and you know, the age of information moving so fast. Like not many people are just like putting money in a 4% savings account anymore, right? They're trying to find the next GameStop or the next ETH or the next Bitcoin, and I think every time you look back at a crypto cycle, like I was just looking at the ETH chart right around, you know, when we started pumping last, we had like the double dump. We had like the DeFi collapse, and we had the COVID collapse. Both went to like $80. It started like kind of going up. And if you look at that graph, there were multiple times where we kind of just like blacked this stuff out, right? But we had gone up to like 300, 400. We were about to break out and like went back down and kind of went all the way back to like 200, multiple weeks of like lull and sideways. And people kind of forget that always happens before the next cycle begins. It's like the final shakeout. Like everyone wants to kind of get that final bargain price on the buyer side. And you're kind of shaking out those final like non-believers. And I truly believe that's what's happening with price now. Like, I guess I'll caveat this with saying, like, if World War III breaks out or something like that tomorrow, that will nuke any of these thesis. But I think we're good. It's when it'll actually happen. So I love Labor Day as a trader and as a crypto holder because in the US, that marks I guess for anybody not in the US, Labor Day just happened on Monday, kind of marks the end of summer for most people in the United States. And I think most people return to their caves and start trading crypto again, and they're back online. They come inside. I think that always aligns pretty well. I've seen like monthly trends for crypto, and I think most of the bullish months are usually in the winter, the US winter. I know you're in upside down land over there, but which is funny. We were just talking about this before we started recording, but at least in the US winter, I think most of the months between like I want to say it's like November and March or some of the most bullish on average, something like that. I could be totally off there, but yeah, I think the meme's real. I mean, 1650 at the end of the day is still a pretty good price for ETH. Like we would have taken that for sure years ago. But I mean, I'll say it again. I think 15K is in play for me for the top on this next cycle. The exact day it starts, I don't know, but I think it's coming.
Yeah, and I think the meme point is like super interesting, right? Where essentially people don't realize that a meme is really just an encapsulation of attention. So if you have attention on something, it's more than likely when it comes to markets, that thing is going to go up in price, right? And we see this play out even in the bear market and the crab market with these meme coins that we spoke about last time with David Hoffman on the show. You know, these meme coins are just attention games at the end of the day. Like, can you get attention on your coin? The more attention you get, the more money you get, and the higher the token goes. So I think when it comes to things outside of meme coins, it's just a general crypto cycle. The reason why it kind of falls into a 4-year cycle, I think there's maybe a couple of different reasons, but the major reason is obviously the halvening. That's an attention sink, right? That gets everyone's attention because it's a meme that says, okay, well, there's going to be less Bitcoin to buy now. And then people think, okay, well, logically the price is going to go up because of that, which obviously isn't a guaranteed thing, but it is a self-fulfilling prophecy if enough people believe that. And then if it happens every time, which it has happened, more and more people believe that it's going to happen again. And as I said, it becomes that self-fulfilling thing. And then, of course, as the BTC price goes up, you get more and more people in because it starts sustainably going up. And then when it hits all-time high, media frenzy begins, bull market goes crazy, and then you get everything else kind of going crazy as well because the attention is squarely on crypto. Right now in the crab market, the stocks market's going up. So where do you think the attention is in markets right now? It's in stocks, right? It's not in crypto. Like right now, crypto is just too dead for people to care about. Even though ironically, it's probably the best time to be buying. Most people are not looking at crypto right now. The attention is on stocks. And I actually think I mentioned this on one of our previous episodes, but if you look at what the stock market was doing in like 2019, 2020, while BTC and ETH were still range bound in their crab market range, the SPX was going to new all-time highs for the better part of like 12 months, right? So if you look at that, and look at what crypto is doing now and look at what the XPX is doing, it's basically on the verge of breaking through a new all-time high soon. And it could happen towards the end of the year while crypto still stays in its lull. But then what happens is that crypto starts going up, right? We break out of the crab ranges and then the attention shifts back and people start thinking, oh, wow, crypto's back. Crypto's not dead. And they start hearing about people making, overnight millions and stuff like that. And they plow in thinking they're going to do that. And that's when you get the proper bull market that pumps everything. So I think that at the end of the day, the meme is just a conduit for attention, and attention is the most scarce resource when it comes to markets. And if you're able to capture the attention, you're able to capture the market action. And I think that's the 4-year, and that's kind of like just the cycle playing out in any markets. But yeah, I think people are confused right now about that, where they think, oh, the stock's going up, why isn't crypto going up? It's because no one's paying attention to crypto right now. No one wants to buy. So I think for a lot of people, if they buy ETH right now, right, and then you tell them, well, it's probably going to be a little while before you make a return on that, they're not going to want that, right? They want to see something going up. They want quick gains. They want quick turnaround, especially in, as you mentioned, this high paced always online society that we're in. And crypto lends itself really well to that when it actually is doing that, right? Because crypto moves extremely quickly when it's in a bull market. But I just think it's going to be a time thing. And I think you're right about the US summer, the European summer, I guess like Northern Hemisphere summer, I should say, being pretty good time for winter being a pretty good time for markets and the summer being a pretty bad time. We actually see that reflected. There's a kind of graphic that I saw which measures all the monthly performance of BTC since basically inception. And September is usually like a lull month where it's basically sideways. I mean, it could go -5% or up 5%. But what people need to realize is that measures the beginning of the month to the end of the month. Inside that month, the price can go down like 20% and then come back up, right? And still end the month neutrally. So I think looking at month-on-month returns is only maybe good for a kind of longer term thing where you take the months together, not looking at them individually. But yeah, if you take the kind of winter months together or the colder months together, it's definitely more bullish, especially at the start of the year. Like the start of the year is actually bullish most of the time for really any kind of asset class, as long as the asset class isn't kind of already in a bull market towards the end of the previous year going into a bear market. So if you're talking just like normal kind of market conditions and regular kind of stuff there on a longer time horizon, that's kind of what happens. And I think the New Year stuff is also a kind of phenomenon where a new year happens and people feel like more hope for the year, right? Because they're like, I'm washing away the old year, it's a new year now. I have all these hopes and dreams. And that happens just psychologically. And I think that makes people more prone to taking on more risk. They're like, oh, I'm going to buy crypto because, this year's my year. Crypto is going to go nuts, whatever it is. So yeah, and when it comes back to like the 4-year cycle, if you just look at the charts, it's playing out exactly the same. 2023 is basically a mirror of 2019, just with less volatility. People don't remember this, but in 2019, the reason why BTC and ETH went up so much was because of this Ponzi called Plus token, which was a massive Ponzi run out of China that sucked in billions and billions of new money, right? New money came in, billions and billions of new money, into dollars worth of new money into BTC and ETH that were, and these people ended up being arrested that were running Plus token and those assets seized. So of course, once the Ponzi shut down, the market came off of that. And 2019 was also one of those kind of like recovery years after the brutal 2018 bear market. But the Plus token Ponzi just sent us a lot higher than it would. And that resulted in BTC basically dumping 50% towards the end of the year. ETH retraced its entire pump that year, which was pretty brutal. But yeah, that just spoke to the fact that there was new money coming in, but it wasn't, it was concentrated in this kind of Plus token thing, which means that it was just basically sold down once that kind of happened like that. So I think even though that happened in 2019 and not in 2023, just from pure market sentiment and the way the markets have acted in 2023, it just very much the same as 2019. So if that's playing out again, you make the prediction, okay, well, history doesn't repeat exactly, but it does rhyme. So is 2024 going to be a repeat of 2020 where maybe we won't have a COVID dump because that's like a black swan thing? And unless another kind of thing like that happens, I don't think that's going to happen. So do we have like just an uptrending year in 2024 where we climb that wall of worry, where we start breaking out of those long-term ranges, where ETH goes back to 3K? I mean, ETH hasn't been at 3K since April of last year. So if ETH doesn't get back to 3K until, I don't know, the second half of next year, that's like over 2 years of range being broken. That becomes a very powerful kind of moving force to the upside. And I think, then the bull market kind of kicks off from there. But yeah, that's my general kind of view on the 4-year cycle and how it all plays into things.
Yeah, I mean, the funniest thing that people always say is like, what's going to be the next catalyst for bull, right? The reality is just price going up. Price goes up.
Yeah, exactly. It's like a circular thing, right?
Exactly. Yeah, you get media coverage. And like the ultimate meme to me always has been are like family or friends texting me about crypto. And like the second, so right now, I don't think I've got a single text about crypto in like 18 months, right? So you just know you're in the
same
bear.
here, yeah.
Yeah, right? It's crazy. And then like at the same time, that's a signal to buy because at some point that's changing. And then like as it goes up, I got like a few like family friend, they're pretty good at it. Like as it starts to heat up, right? They'll like text and be like, oh, I'm thinking about getting back in. And they're like still kind of early. And then like there's like the mid tier where you're like, okay, things are like they'll text and it's getting like a little overheated. And then you got like the top texters, right? Where you're like, okay, we got to fucking sell everything. We got to get out. And it's funny because that like last cycle played out in NFTs too, where like all of a sudden like people were texting about NFTs and like no one has texted me about NFTs in forever. But it's, you know, if you turn on like CNBC right now, you probably don't get much crypto coverage. And it just, I mean, you were talking about the stock market, everything's there right now. And historically, like you can go on TradingView and compare SPX to ETH or to Bitcoin or whatever. And you're right. Like there is usually a lead up spread where like stocks take off. And the reason for this, right, is crypto is a risk on asset. So you're just really never going to see crypto lead stocks. Well, maybe, you know, decades in the future, if like how we think it would play out, crypto becomes a bigger asset class than stocks. But for now, you're not really going to see crypto lead stocks like on a big cycle. What's funny though is even if stocks lead, which is happening right now, which is great. Anytime I see stocks green and leading, I'm fine. Like I know people get frustrated because they're like, hey, crypto's not moving, but stocks are. Trust me, it's way better than the other way around. Like you do not want stocks going down because crypto's not going to go up if stocks are going down. But what's funny is then crypto gets the multiplier higher, right? Like 100x of what some of these stocks go up. So we're seeing a bit of a, I mean, it came back, but now stocks are bouncing, but crypto hasn't caught up. And that gap always catches up. It always does because people are going to take profits in stocks. What are they going to do with it? They want to get risky. They're going to go chase crypto, right? And then, you know, maybe they chase crypto and they do well. And then like last cycle we saw, then they chase NFTs, right? And then maybe they do well on NFTs and then they chase meme coins. Like there's always something lower, right? And I think the reason we're seeing this like longer time gap right now on SPX versus, when you said SPX, I say it. For people that don't know, S&P 500, SPX is kind of the index, right? You would use to kind of like get a gauge on American stocks in general and the stock markets across the world in general. Is people are still a little cautious with inflation and like just some weirdness going on, right? It's not the same market we had pre-COVID where stocks started pumping and then like crypto kind of was like falling right away. I think people are still a little cautiously optimistic. Which is probably fair. There's still some oddities out there that we didn't see in the last few cycles. But I think most of that's going to be shaken off and eventually crypto catches up and that gap will be closed. All of a sudden your neighbor will be texting you when he's at 15K. Hey, should I buy Solana? Should I buy Charles Hoskinson coin or whatever it is? And then you're going to get NFT text and then you're like, okay, I should definitely sell. That's when you sell, by the way. That it's always on point. If you take that last like ridiculous text where it's like, oh, hey, I know you told me about ETH, but I bought shitcoin X instead because someone told me if it goes to $1, it's going to be worth like $1 trillion. Give it like a week or two after that, sell, and it's pretty much guaranteed to be the top.
Mm-hmm. Yeah, that has definitely been my experience, and I think a lot of people's experience with things, especially if you have a lot of people you surround yourself with that aren't in crypto. I mean, obviously, most of the people that I surround myself with are in crypto these days, but I still obviously have friends and family outside of that. And yeah, it is a pretty much like 100% hit rate, which is kind of scary, but it makes sense because it's the attention game, as I said. Like, why are these people paying attention to crypto? Well, because it's gone up a lot. That's the only reason. And if they're doing it like that, then yeah, the top is near, so to speak, and it's worked kind of wonders in the past. But I think the final kind of leg of this discussion is just generally the macro stuff, and I think that when it comes to the macro, I don't really think about it in the context of my crypto investing decisions, because for me, it kind of is irrelevant. I think crypto is still way too small to really be affected too much by the macro. As you said, it is a very risk-on asset class. It's basically where you go once you've kind of made money in the stock market and you want to do something more risky, or it's where you go when you're FOMOing into things and you don't really have an investment thesis on anything. Like, for example, people will buy a stock, like to buy Apple or Microsoft because they're like, oh, Apple is selling lots of products or Microsoft is selling lots of products and they're beating the revenue estimates, blah, blah. But when it comes to crypto, most people are not doing that when they're coming into crypto. They're just buying indiscriminately based on some YouTuber has told them to buy some coin. As you said, maybe it's a cheap coin and they're buying it because they think it's going to go to $1, or maybe they're buying it just because it's been going up, right? There's not really much fundamental analysis going on there. And I think it's just because crypto is very small. It's very misunderstood as an industry. The products and services aren't as obvious as they are in the stock market. So it becomes a game of just like attention at the end of the, like pure attention. It's got nothing to do with anything else, just a pure attention thing. And number go up is the best kind of form of attention there. But the macro kind of stuff generally, I think, even if you think to yourself, well, the Fed is not going to cut rates again until like 2025, 2026, for example. Okay, if you believe that, and it doesn't happen until then, it doesn't mean that the crypto market can't go up, because the crypto markets can just front run it. Because if there's enough of a belief and enough of a narrative that, okay, inflation's come down a lot, the Fed's going to pause rate rises, maybe they won't cut rates for another 2 years. As long as that belief exists, crypto will front run it. And what will ironically end up happening potentially is that the Fed starts cutting rates in 2026. And by that point, we're in another bear market and crypto's just going down. And everyone starts saying, oh, look, the Fed's cutting rates and crypto can't even pump during it. Crypto's dead, right? And there actually has been years where crypto has gone down during years where the Fed has cut rates or where rates have been really low. And I think that's just in the context of crypto just being too small. To be largely affected by it, but also crypto being a lot faster as a market, just front running these things. Because if you look at where crypto bottomed, I mean, especially ETH bottomed in June of 2022. And that was when inflation was at its peak. And then inflation started trickling down over the next kind of, I guess, like year since then. And ETH has not gone to a new low since then. ETH kind of like seemed to have priced that in a lot more quickly. And the same is true for most assets in crypto. I think BTC was the only one that's not the only one, but like BTC set a new low in November, but it wasn't like a big new low. And that was obviously because of an outside external force in FTX, right? That was definitely related to FTX. But other than that, crypto has seemed to front run that sort of stuff there. And then to the upside, I think, as you said, crypto lags because it's more risk on. It lags SPX and stuff like that. But it will definitely front run any kind of rate cuts. I definitely think that we could be in another bear market when the rate cuts actually start happening, which will eventually just be fuel for the next bull market. But yeah, because crypto is 24/7, because it moves a lot faster, because there is like a 4-year cycle rather than like a 10-year cycle, which is what the stock market tends to play out as. I think that it's in crypto, it also doubles because it's halved. The cycle is basically half what it is in the stock market, but then it's double as fast, right? It's half as fast and double as fast as well. So if you look at it from that perspective, I think that matters like that. But as I said, like I don't generally pay much attention to the macro environment because honestly, it's two reasons. I don't think crypto is big enough. And if I'm investing in crypto, I don't really care to look at the macro stuff. But two, if you look at the macro stuff, you overload yourself because the macro thing is so much bigger than any individual. It's so huge that you literally, as an individual, have no power over it at all. You have no power to change it. The only thing that you could probably have a little bit of power over is changing the president in the US, right? When you go to vote, right? Or changing the Senate or the House. Like that's the only real power you have. But that is influenced by so much more than the markets and the macro environment. That is influenced by a million different things, right? The social kind of side of things as well when it comes to social rights, things like that, like things that are outside of the financial purview, that plays a huge part in it. So yeah, just generally, I mean, we don't have control over it, so there's no use getting kind of upset about it. You can base your trades and investment on it, but for me, if I based my trades and investment on in crypto on the macro, I would not have bought ETH in June of last year, right? I would have been like, oh my god, the macro is so bad, inflation is going to keep going up, everything's going to go to shit, and I would have missed out on buying ETH in triple digits again. So I'm glad I didn't follow the macro stuff.
Yeah, the issue with following the macro stuff, like the macro doomers and stuff like that, is like if you just zoom out on charts, they're forever wrong. Like just zoom out on an all-time stock graph, right? And an all-time just US economy, world economy graph, like they're just wrong. And like it always comes down to kind of the point I was just saying earlier, like at the end of the day, where are people going to put their money? Like in the US, at least, in general, people that are working and they have paychecks coming in, they're like very directed to put their money into the stock market, right? You got 401ks, like, you kind of like get these financial advisors. Every one of them wants you to just pump money into the stocks, right? And like, that's the reason I never will believe the macro bearishness, stock bearishness. Cause like, I mean, what is everyone just going to put their money under their covers, like under their mattress for years? I mean, yeah, maybe that happened in like '08 for 2 years, but even then, that was like an all-time buying opportunity on stocks. Like the world literally, people thought was the world was coming to an end with the housing crisis, and in all reality, that was just an all-time buying opportunity. Like 3 years later, everything rebounded and people were making money again, right? So I just yeah, I get some of the stuff on like maybe some numbers or metrics don't look great right now, but in all reality, like you just have to kind of zoom out on these charts and realize what history has done, and it's just not going to like go to zero. Like it's just not going to happen. And the main reason is people just keep making money and they got to put it somewhere. Like that's just the reality of the situation. So, I'm with you. Like I never really base crypto decisions. I mean, for crypto for me these days it's like a little easier, I guess, because I just have my ETH staked and I'm just chilling and earning interest and restaking it, and that's just my play for the next until I die, basically, to be completely honest. Yeah, every once in a while, like on a big dip, I'll throw some money at it. But other than that, like I'm not making too many bigger decisions. But if I step back, like when I first was investing in ETH and stuff like that, it never was a factor for me. Like I never listened to like macro podcasts or read macro like newsletters or anything like that. Cause I mean, when it's such like a nascent industry that you think, and I've said since day one of us doing podcasts forever ago, and I know you have too, like this is a multi-decade play, and you got to realize we're still early. Like for ETH, we're still in the first decade, like decade zero, I guess you would call it, or whatever. I guess decade one technically, but like we're still in the first 10 years. And like this stuff is still going to be kind of getting built, like maybe even well beyond like our years, right, of doing this stuff. And it's not like overnight crypto's just going to take over. And if you realize that, the day-to-day movements shouldn't really matter to you because like, and people get so caught up on this and you see it, right? And like it's why like people chase NFTs and why people chase meme coins and why people chase layer ones and why they chase all this stuff. They want like the day-to-day profits, and the best investment is always going to be something that you, or the best like investment thesis is always going to be something you truly believe in that's going to like transform the world, and you're fine just chilling in it. And like if ETH goes from, I mean, originally for me, from $1 to $23 and down to $5 and then up to 14.20 and back to 80, like it doesn't matter, right? Because you believe in it and you're not, I mean, yeah, points I was overinvested, I guess, but like that's also part of like really believing in a movement, right? But you're not going to like try to trade yourself out of it because something moves or someone tells you the stock market's crashing. You're not going to like reinvent your thesis for why you think ETH's going to change the global economy, right? And change people's lives for decades to come. So I'm with you. Like I don't bother myself too much with that stuff. I mean, even when the stock market's crashing, I'm just kind of chilling. I always have been. Always kind of gives a good like day to rebuy ETH because I'm sure ETH's crashing on those days too. But like I said, if you zoom out on stocks, it's up only. I don't really see a point in my lifetime that stocks won't be up only. Like I don't see a thesis where it wouldn't be.
Yeah, yeah, and I think on that like kind of multi-decade kind of approach that we've always taken to this industry fits nicely into some of the regulatory stuff with crypto as well. I think people end up fudding themselves out of their bags, so to speak, because they worry about the regulatory side. And yes, okay, we've seen a lot of hostile kind of like regulatory stuff towards crypto, but a lot of it has got to do with the fact that there's crypto's new. There's not a lot of laws and regulations that have been tailor-made for crypto. So some of these agencies are literally just applying the law. And if they don't do that, then they risk losing funding as well, because they obviously need to prove to Congress that they're doing their job. Then you also have people that have a vendetta, like Gary Gensler seems to have against crypto, where he just wants to take a very hostile approach and he ends up just losing in the courts anyway. But I think generally the regulatory stuff, because it moves so slow, will play out during those kind of multi-decade things where countries around the world, not just the US, but like every country around the world, will have their own legislation around this, their own regulations that are tailor made for crypto so that we can actually keep building these things out. And I know people will say, oh, it's so bearish, they're trying to kill crypto in the US, blah, blah, blah. It's like, if they were really trying to kill crypto in the US, guys, like they would have just banned it. I mean, they would have made it so hard to interact with it. They would have basically shut down the exchanges, said that they were basically illegal money transmitters or done whatever. Like they could, they being the government, could have put their weight behind this to kill crypto. But they don't want to do that. They don't want to kill crypto. I think what's happening is that there's just too much bureaucracy. There's not enough guidance on the regulatory front, and especially within the law, that we just get this hodgepodge of kind of crap happening. But that's all temporary in my mind. I think that's going to get ironed out. I think that the industry is going to mature a lot, especially with these TradFi players now, like BlackRock getting involved. They're going to push the maturation forward. I mean, I don't know how many people are paying attention to the TradFi world right now, but they fucking love crypto right now. Like they love crypto, especially these ETFs. They're all about it. They're like, holy shit, ETFs. Because for them, it's like, we can now access all of this retirement account money. We can funnel it into these ETFs, and we can make a shit ton of money off of fees doing it for an asset class
fees.
Exactly. For an asset class that hasn't been saturated yet because it hasn't traditionally had access to that money. So they're just looking at the trillions of dollars that they manage and saying, well, even if we put a small percentage of that into these crypto products, the crypto market's just going to grow so large, and we're going to be able to take those fees and repackage these products to our, boomer clients, right? All this old money that's hanging around. So for them, they're like, and they're doing it at the right time too, where they're like, everything's quiet right now. We can get our foot in the door. We can start getting these products onboarded. So I think people really need to be paying attention to that, because these TradFi institutions, they aren't worried about regulatory stuff because they know the game. They know that it's going to get ironed out. They know that it's not a hard blocker for adoption of crypto. It's just, it's a thing that takes time to play out. It might stall some things for a little bit, but eventually it's going to come. And that goes back to what we were talking earlier about the ETFs. The TradFi players, they know the ETFs are now inevitable. That's why they're all filing for it, because they're like, I want my ETF. I want to be able to take fees off of it. I want to be able to get this money in, and they're all going to be competing with each other for it. I mean, Fidelity recently published last month a report on the Ethereum investment thesis. So not only are they looking at Bitcoin, they're looking at Ethereum as well to basically shill to their clients who have a lot of money. But what people don't understand is that crypto money is fucking nothing compared to TradFi money. We are literally a fly to be swatted away. That's how irrelevant we are right now to TradFi. The money in TradFi just absolutely dwarfs crypto. And when we start unlocking that money and bringing it into crypto and allowing it to play in crypto and invest in crypto assets, that's going to unlock the next leg for the industry, and that's coming. I mean, people, as I was saying earlier, people, especially traders, are just like, oh, the ETF news did nothing for the price, blah, blah, blah. That's because, as you said earlier, Eric, the market is severely underpricing the impact of this because they just don't understand it right now. They don't understand what this is going to unlock, and they'll will over time. But by the time they understand, we're probably in another bull market, and then that they just send us higher, right? They just bring that money in. But yeah, that's kind of generally how I view the regulatory stuff, is that it's a temporary hiccup at best.
Yeah, no, I mean, I think you made some great points. I'm glad you kind of circled back to what I said earlier. People are severely underestimating the ETF stuff. And so what you said, I think, is vitally important, is fees, right? And like these institutions, whether Fidelity, BlackRock, E-Trade, whatever you want to say, they're going to push this so hard because they just see money, right? And like the bottom line for them is they have shareholders and they need to find new revenue. And are you kidding me? Like bringing in crypto ETFs and pushing it to their customers and taking a cut of everybody that trades on these ETFs. I mean, they're going to be pumping this like none other. Like it's a totally new thing. Like, I mean, if you look back at like the gold ETF too, and like what gold's done since then, and like, basically every industry that's got an ETF and what happened after the fact. And like, I personally, so why do I think most people are severely underestimating the impact of ETFs? It's because I personally know a lot of people that are still scared to scared is probably the right word. Still like shy, scared to use Coinbase. Like, and I know that sounds weird maybe to like a lot of our listeners, especially like younger listeners. It just exists. Like people don't really get like, okay, who's like, so Coin, and it's gotten a little better since they became publicly traded, but like, are they regulated? Like people are so used to FDIC insurance in the US. Like, do they have FDIC insurance? Like, what happens if they get like hacked or they go under? And like, these are all actually very legit questions, right? And like, do I need to like know my crypto keys? You throw that on Fidelity, who like people have used for years, boomers love, and they're just like, oh, buy Bitcoin. That you have no idea how many people are sitting out there ready to do that. And it's right in front of them. And also they can do it in their 401ks, they can do it in their investment accounts. It's just they don't have to think about private keys, they don't have to think about Coinbase, they don't have to like log in and see wallets. There's a lot of money sitting out there waiting for this. And I think people are grossly underestimating how much money is actually sitting out there for it. And even money that maybe doesn't know. There's a lot of people that still just don't really know about crypto. Like, yeah, sure, they've heard like Bitcoin and ETH, but like if their brokerage or their financial advisor starts saying, hey, did you hear about this new Bitcoin and ETH ETF? Like, you should check it out. You can buy it through me. It's going to open a whole new boom. It just really is. Because right now, the reality is you have to go on Coinbase. You have to like, I know people that are scared to wire from their bank to Coinbase because they think their banks are going to like blacklist them. And like, that just is like, I get it. Like, even I maybe think like my bank will see something weird, like more back in the day before Coinbase wasn't like legitimized through their IPO or whatever you want to call it. But there's just, I think a majority of people are waiting for this to get into crypto. And I think the market's just severely underpricing it.
Yeah, yeah, and I mean, yeah, I totally agree with that, and I think, as you said, like people are generally scared of new things, especially the older folks who have the money. By the way, like a lot of people really don't. I think still don't understand that most of the wealth is concentrated with the older folks, and it doesn't have to be just cash that they're sitting on. It can be coming out of other assets. Maybe they want to rebalance their retirement account and say, okay, well, I'm going to allocate like 1% to crypto for now. And if enough people do that, that's a lot of money coming in that's being rebalanced out of other asset classes into crypto. And as I mentioned before, and as you said as well, crypto is new to these people, and it may not be new to us because it's been around for so long now, but it's new to these people. They're going to buy. They're going to buy based on what these institutions tell them as well, because Fidelity will put out a report or BlackRock will put out a report saying Bitcoin is digital gold, and that's what these people are going to buy based on. They'll put out a report about Ethereum being, this new tech or whatever, and then people will play and invest with it because it's a tech play for them or something. Because they're like, oh, I know tech, like Apple and Microsoft and blah, blah, blah. And they look at that and they're like, holy crap, tech's been the biggest winner over the last 20 years or whatever it is, 10, 15 years especially. They're going to invest in that. And then also they can kind of give the Ethereum investment case from a store value perspective as well there. But yeah, I think that's all going to happen, and I think it's going to be very bullish. But I guess like on that bullish note, we're probably out of time for today. But I hope that everyone is feeling a lot more bullish after that. It's funny. Some people made some comments that the episodes that we do focus more on the market side of things than I usually do in my daily episodes. And I think that's probably a better kind of fit for what we talk about here, because the market stuff is something that I generally do pay a lot of attention to, but don't talk about too much on my show daily. But I think, yeah, both you and I have a lot of attention paid to it and have a lot of things to say about it. So I'm glad that we get to do these episodes. So yeah, thanks again, Eric, for being on. And I hope everyone's feeling bullish.